Hello, my name is Nick Bruscato, and I will be presenting flood hazard identification and the National Flood Insurance Program in Indian country with my partner, Dr. Frank Shockey. I will be presenting the first part about accessing and understanding FEMA flood risk data, and Dr. Frank Shockey will be presenting the second part. So for this first part, we'll be going over our objectives of this presentation, how to read flood maps, how to develop flood maps, and then how to access flood maps. So our objectives today are understand how to read a flood map, understand how flood maps are developed, and then know where to find flood maps and other flood risk tools. So throughout this presentation, I may reference other FEMA regions. So here's a quick map to reference those other regions. Frank and I are out of FEMA-Region 5 in Chicago. You may be familiar with some of the FEMA regional tribal liaisons. This graphic's a little dated, so there might be some personnel changes throughout the agency. So why are we producing flood risk data? Why are we making flood maps? Well, it's to protect lands and people for generations to come. It's important to understand those flood risks and understand the impacts of those natural events such as flooding to prevent injury and loss of life, protect lands and cultural heritage sites, and reduce the cost of response and recovery efforts, and support what's important to you. So we're going to dive into how to read these flood maps. On the right, you'll see an example of a FIRM panel. A FIRM is a flood insurance rate map. That's our flagship product. On that FIRM, you can see that there's a special flood hazard area identified in that blue. Then we'll also use that special flood hazard area to identify specific properties in relation to that special flood hazard area. And on FIRMs, we'll be able to identify a base flood elevation or the height of a flood at a 1% annual chance flood site. And then also identify priority areas, areas that maybe we could develop mitigation projects or areas that we can communicate where there's a high risk of flooding. So what do we see on this map when we zoom in? Well, we have a floodway that's designated by that white slashed line. We have our base flood elevation, our BFE, identified by that number 664 as it sits across that cross section. We have a 0.2% annual chance flood. That's our moderate risk. That's designated by those dotted lines. And then we have our special flood hazard area. That's that blue area with those blue dots. That is designated by that zone AE that indicates that this specific flood zone is a part of a detailed study and is high risk. So what are we going to see when we're looking at these flood maps? Common physical features like highways and waterways, our special flood hazard area, which I just spoke about, that floodway that I just identified, that base flood elevation, and that 0.2% chance annual flood. Okay, so that floodplain snapshot, that FIRM snapshot that I just showed you was for riverine flooding. We're going to look at what this map might look like in a coastal area. Similar to that riverine floodplain, we have AEs, but we also have this VE. So if you're looking at the graphic at the center of the slide, we have on the far right of that middle diagram, CHHA, VE, that's that velocity, that coastal high hazard area. That's that wave velocity zone. As it moves inland, we have a coastal A zone or that AE. And then we have that inland flooding, that AE, similar to that is represented on riverine flooding. You can also see in some cases there might be run-up and overtopping. That flooding that moves over a bluff possibly is designated by an AO. And then you can see on that image on the bottom right of the slide, that graphic, you can see where a cross-section would be laid, and then that profile of that base flood elevation where those waves are at. Okay. So let's look at this, what a firm would look like for a coastal floodplain. You can see where that CHHA zone VE is, in that elevation of 590. You can see where the transect would be laid as it's perpendicular to the coastline. And then in this case, we have that zone AO for that run up or overtopping area. And then you can also see where that zone AE and that elevation just underneath it would be. So these flood zones is like an alphabet soup, but I just want to quickly identify some of those ones that might be more common as you come across it. So zone A is a less detailed flood study. It's still a high risk area, but there's no base flood elevation shown. An AE is a detailed flood study where base flood elevation is shown. That V zone, where that CHHA, where wave heights are 3 feet or higher, but there's no base flood elevation. And then the VE zone, which is similar, that CHHA, where wave heights are 3 feet or higher, base flood elevation are calculated, and it's a detailed flood study. You might also see these X shaded and X unshaded. The X shaded 0.2% annual chance floodplain is a moderate risk of flooding. And then the X unshaded is a low risk of flooding. There's always a risk of flooding no matter what. Some areas are low risk, some areas are of moderate risk, and some areas are high risk. So locating the base flood elevation on maps, we're looking at those cross sections. We're looking at the number associated with those cross sections. You'll see that actual elevation height right by the zone AE on that bottom right picture where it says Lake Superior. That's 605. In coastal floodplains and areas of shallow flooding like zone AH or AO, the BFE or depth number is listed in parentheses below the zone designation on the flood map. So why do we have these flood maps? What are we doing with them? Well, they're instrumental in the National Flood Insurance Program, but I'm going to let Frank talk to that in the second half. But these help us know where there's flooding, what our base flood elevation is, and can help us better mitigate for that risk. And it's important to know that these floodplains and these areas of risk don't just stop where the boundaries are at these maps, but it's fluid. And that it's just important to know where areas of high risk or moderate risk are, and that there are steps to take to then mitigate that risk of flooding in those areas. So now that we've understood what these maps look like and how to read them, what goes into them, let's talk about what it's like to develop them. So this is reflective of Region 5. This process mirrors similar process in Region 8 and Region 6, Region 2 and Region 10. But we're going to follow two paths, the top path, the regulatory path in blue, and the non-regulatory path in green below. The regulatory path is our flagship program, the risk map process. MAP is an acronym, Mapping, Assessment, and Planning. This develops into our FIRM. This is our detailed flood insurance rate maps. The non-regulatory path, we will outline our base level engineering procedure, which uses LIDAR technology, the light detection and ranging ground elevation data, to provide a cost-effective and quick snapshot of floodplain based on elevation and engineering that's similar to a zone A on our FIRM. This is then scalable, and as you can see based on the flow chart, this can be incorporated into a FIRM. Now, our regulatory mapping process begins with a discovery meeting. This is our opportunity to meet with tribal officials and technical staff to talk about where we're going to study and why. Maybe there's increase in flooding in certain areas. Maybe there's economic development. Maybe we're seeing that population centers are changing. Maybe the impacts of climate change are causing a larger floodplain or more soil saturation. So we're seeing more and more flooding. All of these and how land use might change from year to year. We're incorporating all of that into this discussion, this meeting, and how we're going to scope out this mapping project. We'll develop a discovery report and then move on to our next stage, which is data collection and analysis. This is where we're taking everything that we talked about at our discovery meeting, where we're studying, which streams, and then we're incorporating and collecting data on hydrology, hydraulics. Maybe there's an existing firm that we're going to build off of. We're incorporating that terrain data from LIDAR like we did with base level engineering, and then look at infrastructure and in some cases, multi-hazard data. Once we have incorporated all of this information, we will then produce a draft map or a work map. And this is usually around year 3 to 4 in the process. And we'll have a flood risk review meeting where we meet with tribal officials and technical staff to review the maps that we produced. We want to make sure that the maps are reflective of the needs and the wants of your office, and also make sure that they look right. Maybe there's flooding projected in an area that's never flooded before. Maybe there's no flooding projected in an area that habitually floods. So we want to make sure that we have all the right information. Maybe there's a data set that you have that you want incorporated that we didn't get in the data development stage. We can go back to the drawing board, incorporate all of those comments, and then move on to our preliminary map phase. Now, the preliminary map is when things kind of lock into place, where that regulatory component really can't go backwards anymore. So once that preliminary map is released, it'll appear on one of our public viewers, and you'll be able to see how it's reflected. And that map will ultimately look very similar to our final effective map in this process. We'll have a CCO meeting, a consultation coordination officer meeting with tribal officials to talk about what this map looks like, what are the implications, next steps, adoption, and that's really where Frank's side of the house kind of takes off. And then we'll meet with citizens and members to talk about where flooding is and how it may impact structures and land. We will then also talk about the flood insurance program a little bit more. Once this prelim is released, there's an appeal and a comment period. A 90-day appeal process is initiated. After the appeal and comment period, we have a letter of final determination. After all appeals are resolved, FEMA sends a letter of final determination. We call that an LFD, kicking off a 6-month period for tribal nations like yourselves and then other communities that may be in the project area to adopt the new flood maps before they become effective. Here we are at year 5+. We'll have a resilience meeting, and this is our opportunity to meet once again. This is our 4th meeting in the process to talk about how we can use these flood maps, promote resiliency. We have all this great digital data. How are we going to use it? We're going to talk about the hazard mitigation planning process, incorporating digital data, and just generally building capacity around these products. Then the map will become effective, and you have a new map that reflects the flood risk in your area. And hopefully with some new skills and some, after this capacity building, the resilience meetings and these new maps, we can hope to promote resilience in your nation. So with these maps, we get a flood insurance study report as well. And other flood risk products might be included in the scope of the project. This could include changes since last firm, water surface elevation grids, and flood depth grids. You can see how they're projected here. The changes since last firm product takes an old firm and then highlights the area where the new firm either increased or decreased, as you can see on that top left image. And it shows how floodplain is increasing or contracting and changing over time. Flood depth grades and water surface elevations, pretty straightforward. We're looking at the ground surface elevation, how deep are those floods at that 1% annual chance flood. And these maps are not always set in stone, but there are opportunities for letters of map revision to revise certain parts of our flood maps, but they must be backed with engineering and sound data. So we've developed these maps, you know what they look like. Now we have to find them online. How can we use them? Well, there's a few resources on how to access these flood maps once they're produced. We have our Map Service Center. That's our kind of go-to center stage for everything that we produce. You may be familiar with this website, msc.fema.gov. You do /portal//search, and you can put in your website. It'll pull up something like that image that you see on pretty much center of your screen. And you can look at a dynamic map. You can print a fermet, which is kind of a little snapshot of the firm just for that specific area, that specific address. And then you can look at if there's any changes or amendments to that. That address search bar is really great and easy to look exactly on what your address would be on that firm. So you're using the National Flood Hazard layer, which we'll look at on the Special Flood Hazard Viewer on the next slide. But here's kind of a zoom of that search screen. You can also search all products based on state jurisdiction, county, or community. That's how we've broken it down on the MSC by state, county, and community. Is not strictly the tribal name is not strictly a search mechanism. You can also search by product ID, but through those different drop downs, we have even more drop downs: that effective product, firm panels, the flood insurance study report, and then you can download the National Flood Hazard Area. That's the shape file that then you can incorporate with additional products on your own ArcGIS program. That effective product drop down into firm panels, you can see here how it rolls out. You have a product ID, that's that panel, the effective date, when was that map released. You can download it, you can view it, and you can see if there's any letters of map change for that product as well. And here's what they look like. If you're viewing the panel, you can make a fermet, that little snapshot of the firm on this viewer as well. This is an older map from 2014. You can see here that process of where to select and take that snapshot. Now these maps, this index map is going to be a tool to find that specific panel for that specific place that you're looking at flooding. And there's several different panels that you might need to locate that are in that drop-down menu. Another option in finding that flood risk information is the National Flood Hazard layer. That's where you'll find your special flood hazard area on more of an interactive geospatial viewer online. On that viewer, you can put in an address and it'll take you to that in that search bar. And you can also select and deselect the layers on this viewer. You can also create a fermet, which you could on the MSC as well, through this pop-up window, print flood maps. And to get those shape files from the National Flood Hazard layer, that special flood hazard is in these shape files, which you can download in that box, which I mentioned earlier. Flood Map Change Viewer, or FMCV, shows where prelims are released, preliminary maps. And in some cases, you can see where a preliminary map may overlap with the current effective map, and that changes since last firm information can also be present. You can see here where special flood hazard may have increased or decreased, and you can see how projections may change. This flood map change viewer is where you will also be able to interact with the preliminary maps. and see those projections as well, and you can deselect the special flood hazard area. The flood map change viewer also has a comparison tool, which is that box on the right side of the slide, that can compare the effective map to the prelim and give you some of that information on the bottom. And then of course, there's a community map repository, or CMR. Whenever new flood maps are issued, hard copies of maps are mailed to the CMR. That CMR is designated by tribal government. And the CMR is usually in the local or tribal planning or zoning department, but that's up to you. So thank you very much. That concludes my portion of the presentation, and I will pass this off to my counterpart, Frank. On to part 2.
Good afternoon, everyone. My name is Frank Shockey. I work at FEMA-Region 5 along with Nick Bruscato, who you just heard from. I work in the floodplain management and insurance branch in our mitigation division. So I deal with local communities, states, and tribal nations in regard to the National Flood Insurance Program. So I'm going to talk about the second part of our presentation, which has to do with the National Flood Insurance Program, where it intersects with Indian country, with tribal lands, reservations, allotments, any sort of concerns for tribes and tribal members. So I want to give a quick background on the National Flood Insurance Program. Very quick. Don't want to go over each of these items in detail, but essentially the program was created about 50 years ago by Congress in the National Flood Insurance Act of 1968. It's been a subject of considerable discussion and controversy, chops and changes and reforms over the years, and most significantly in 1973, 1994, 2004, and then about 8-10 years ago between 2012 and 2014. Notably, the Flood Disaster Protection Act of 1973, the first of those sets of reforms, initiated the most significant consequences with regard to flood insurance for financing of development projects in areas where flood hazards have been identified. And that, I think, is probably the subject that's going to be most interesting to folks in Indian country when engineers and the folks on Nick's team are talking about making flood maps. Whether your tribe would like to have flood maps in the form of a flood insurance rate map, whether you'd like to have data in the form of that base level engineering that Nick talked about, or whether you're not really sure and you'd like to discuss that with FEMA and other stakeholders to determine what sort of a direction you'd like to go. So you heard a lot from Nick about the process of the maps and how they provide a lot of useful information. Most of that is in service of what we like to refer to as the other legs of the NFIP stool. Essentially, the program, it's a voluntary program in which jurisdictions, local communities, cities, townships, villages, counties, and tribal communities that have land use authority over some area, and in some cases states where they don't delegate that authority to local communities, participate in the program in order to allow their residents, business owners, anyone who has an interest in property that could be insured to purchase flood insurance. And in order to do that, the community adopts floodplain management regulations, land use regulations that govern development activities in these flood hazard areas. So you can start to see how the products that Nick talked about, the flood maps, the flood studies, information about the elevation or height of floods, is used for this land use management regulation scheme that your community could choose to implement in those flood hazard areas. And in return for implementing those regulations in those areas, flood insurance is made available. It's made available without regard for whether you're in one of those flood hazard areas or not. But in order for it to be available, community needs to join the program. There's also some incentives that come along with that, which we're not going to talk about a lot today, but you can be eligible for grants and for some discounts on flood insurance if you do some things that go above and beyond the minimum standards. So, real basic, communities can choose to participate or not participate in the National Flood Insurance Program. Any community can join, regardless of whether Nick's group, the risk analysis folks, have provided any flood hazard data. There doesn't have to even be a map. You can join the program. You just have to go through the steps to join the program. And the hallmark of this is that flood insurance is available if the community participates in the program, and it's not available at all in communities that don't participate in the NFIP. If you have the insurance available in a participating community, we have standard flood insurance policies. Rules are the same, terms and conditions are the same regardless of where you're located. If it's a National Flood Insurance Program policy, they can insure buildings or personal property, the contents that are inside of a building. That includes a condominium unit. The contents of condominium unit includes manufactured homes, considered buildings, but it doesn't include certain other things. We can't insure land or the value of land. We can't insure crops that are growing in the ground. If they've been harvested and they're stored in a building, they might be insurable as personal property, but not if they're growing in the ground. We can't insure buildings that are entirely over water. Can't insure buildings that aren't enclosed with at least 2 rigid walls and a fully secured roof. We don't insure cars or other vehicles or swimming pools. So the program is mostly focused on concern for buildings, personal property that's inside of buildings. Now, I've been talking about communities, and I've kind of spoken about states and local governments. Well, there is a definition in our regulations of what we mean by community for purposes of participating in our program or being shown on our flood insurance rate maps. Community means a state or an area or political subdivision thereof, such as a county or a township, or in Louisiana, they call them parishes, or any recognized Indian tribe or authorized tribal organization, such as a state recognized tribe, perhaps, that's considered a political subdivision of a state, or an Alaska Native village or other authorized Native organization. And this is the key point, which has the authority to adopt and enforce floodplain management land use regulations for the areas in its jurisdiction. So if you have land use jurisdiction over some area of land, then your entity, whatever it is a community for purposes of that area of land. To join the NFIP, the governing body of that community would adopt a resolution that recites a specific intent to join and goes through a list of formal commitments to FEMA to participate in the program. And the governing body of the community would adopt land use regulations that implement certain minimum floodplain management standards based on the data that we've provided. If we haven't provided any data, the standards are pretty general. If we provided detailed data, the standards get a little bit more specific, and they would be based on those maps and those flood insurance studies that Nick talked about. And then there's a 1-page application form with no fee to apply that you would send in along with that to us. And any community, I need to stress this, can join the NFIP regardless of whether we've made any maps at all or provided any flood hazard data at all. The level of detail of those regulations varies with the type of data that we provide. So now to talk about tribes in the NFIP in a general way, around 45 tribes nationwide participate in the NFIP. That's not a very large number, considering there's about 300 or so tribes nationwide and a couple hundred Alaska Native villages that potentially could participate in the NFIP. That's a relatively small proportion. And then among those tribes of the NFIP flood insurance policies that are enforced in those tribes areas of Indian country written under their ID numbers associated with their lands, about 90% of all of those policies are on the lands of just 11 of those tribes. The 11 tribes that have 10 or more policies enforced somewhere on their tribal lands. And about 62% of them are on the lands of just 2 of those tribes. So there's a few tribes that have made this program work for them, useful to them, and have folks in Indian country buying insurance, but it's not a very large uptake in participation or in using the insurance to get that financial indemnity that comes along with it. So it kind of raises a number of questions. How many tribes are there out there where their boundaries and their ID number have been identified and shown on our maps over the 50 plus years that this program's been in existence? I don't know offhand. It probably is more than 45 and probably a lot less than 540. How many tribes have some sort of tribal lands, whether trust land or allotments, that are shown on our maps in some form or another, and those boundaries of the areas within the tribe's jurisdiction or an ID number for that tribe is not actually shown on the map. Again, I don't really know the answer to that question, but I'd speculate that there's areas where there's Indian country that's not been identified correctly on our maps. There's been a variety of past practices with mapping tribal lands. You see an example in the upper left corner there. It shows what was an unincorporated area of Carleton County, Minnesota, in the vicinity of the Fond du Lac Band's Indian Reservation. And we have a blank white space where the boundaries of the reservation were known as of that time in the 1970s, and it simply says area not included. Blank space, no data provided to show any sort of flood hazards within the Fond du Lac Reservation. In the upper right corner, we have flood hazard data on numbered A zones identified there in the Lakota Rays Reservation in Sawyer County, Wisconsin. But it says for informational purposes only. So the firm applies for the unincorporated areas of Sawyer County, but what it means for the Lakota Rays Band of Lake Superior, Chippewa is not real clear. And then at the bottom, we see another example, the Red Cliff Band, Lake Superior, Chippewa in Bayfield County, Wisconsin, a much newer map where we have flood hazard data showing on an effective firm. So we have no data, we have some data, or we could have potentially all the data that we could provide already provided. So for any one tribe, it really pays to identify what kind of flood hazard data is there out there and what kind of data maybe could be provided in the future. And if you had it, what would you do with it? So that's what we're going to focus on here. In a general sense, we might ask, why would my community want to join the NFIP? If, let's say, your community was a county or a village, why would you join? Well, folks in the community might want to buy flood insurance. They might be in a situation where someone is telling them that they ought to get insurance, perhaps as a condition of building a building or getting a loan for the purpose of building or remodeling their house. So one of the reasons communities would consider joining the NFIP is because FEMA, or our predecessors, HUD, that ran the National Flood Insurance Program in the 1970s, were providing flood hazard data to identify those flood hazards. And people were starting to say, hey, I need flood insurance because they're showing me that there's a flood hazard here. And the question that raises is, well, what happens if my community joins the NFIP? And what might happen if my community chooses not to join? Federal court in the 1970s observed that the National Flood Insurance Program is a typical congressional carrot and stick scheme. There's a carrot in the form of National Flood Insurance Program flood insurance that's available if your community joins. And then there's a stick, a sort of penalty that applies if you choose not to join after flood hazard data has been provided on a flood insurance rate map that has taken effect. So that's why Nick emphasized that distinction between regulatory and non-regulatory products. The firm is kind of the part where the stick piece of this is initiated, whereas the carrot could be available regardless of whether you have a firm. So on a more individualized basis, property owner, business owner, somebody who lives in a house and has personal property that's inside that house or that apartment, why would they want to buy flood insurance? Well, insurance is a contract that says you get paid when your property is damaged. So they might want that indemnity, this provision for the future that could possibly cause damage to their property. But a lot of people don't really take some convincing to believe that they need that insurance. So there are circumstances where sometimes someone who's involved with the financing of their property, like a lender, a bank, a mortgage company, might say, well, you need to buy flood insurance or I'm not going to make this loan. So a lot of times folks buy flood insurance because they're told by someone, a lender usually, that they need to buy it in order to have that loan. Now, what can happen is that people can't find the insurance or they can't afford to pay for it, in which case their lender may say, well, you need this insurance, so I'm going to buy it for you. Or they might not make the loan if that insurance isn't available in the area where the property is located. So this is where we come to that Flood Disaster Protection Act of 1973 that I mentioned. There's a concept that came into play through that act, Section 102 of that act, called the mandatory purchase of flood insurance. And that applies where the community, the jurisdiction where the land area in which the building or personal property is located participates in the NFIP, and the building is located in one of those high hazard areas shown on a flood insurance rate map. And either there's direct or indirect federal financial assistance for acquisition or construction purpose being provided for that building, or there's a federally regulated and lender regulated by a federal lending entity that is making, increasing, renewing, or extending a loan secured by that building, or there's a loan that's transferred from some lender to a government-sponsored enterprise for lending, such as Fannie Mae or Freddie Mac. Now, the financial regulators regulations in Title 12 of the Code of Federal Regulations refer to a thing called a designated loan. And a designated loan means a loan that's secured by a building or a mobile home that is located in one of those high hazard areas or is to be located. So you're getting a construction loan or you're purchasing a mobile home that's going to secure a loan and it's going to be located in one of those high hazard areas in an area in which flood insurance is available. So if the community is not participating, it's not a designated loan for conventional lending purposes. Federally regulated lenders can make loans that are secured by property in non-participating communities. This is the typical situation, however, that's encountered by FEMA and state staff and by lenders and insurance companies. So if you, doing business in Indian country, come to FEMA or to a lender or an insurance company and you ask about the National Flood Insurance Program and flood insurance, they may say, well, if your community is not participating, you probably will be able to get access to some kind of capital for purchasing or building buildings, but it might have to be conventional loans. So the perspective that people offer you may be warped by the fact that this is a very typical situation. Now, I can hear some participants, some folks listening to the presentation may be saying, well, but there's not as much conventional lending in Indian country. There's a lot of economic development. There's a lot of housing development that relies on direct or indirect federal assistance, or that relies on at least some sort of federal assistance or guarantee for the loans. We'll get to that in a minute. What does this mean for Indian country? There's other sources of capital that are frequently called into play to use for housing development, economic development, for rehabilitation of existing housing in Indian country. There's HUD programs, there's VA programs, there's USDA rural development programs, there's all kinds of special conventional lending initiatives. There may be tribally owned housing that's developed for multifamily living where the housing is going to be owned by the tribal government. There's a lot of different financing schemes that can bring into more complicated arrangements than what might be typical if a non-Indian person was to buy land in the city of Chicago or in the suburbs of Grand Forks, North Dakota, and build a house with a conventional loan from the bank down the street. I referenced financial assistance for acquisition and construction purposes, which is one of the things that brings into play the insurance consequences of having this data. Financial assistance is pretty wide ranging. It means loans and it means grants. It means guarantees, loan insurance, it means payments, rebates, disaster assistance loans and grants, or any other kind of direct or indirect federal assistance. And for acquisition and construction purposes means that it's going to be used to build, acquire, construct, reconstruct, repair, or improve a publicly or privately owned building or mobile home, or any of the machinery, equipment, fixtures, and furnishings that are in that building or mobile home. Specifically including the purchase or subsidization of mortgages or mortgage loans. The only exception to that right now is disaster assistance under FEMA's Stafford Act disasters for disasters other than floods. So to rewrite that double negative, it's financial assistance for acquisition and construction purposes if the disaster was causing flood damage. But if it's a wind disaster or wildfire, then it's accepted from this definition. So this is one of the consequences of having flood hazard data available on a flood insurance rate map that I really want to emphasize. There's another section of that Flood Disaster Protection Act of 1973, section 202, which says federal financial assistance for acquisition and construction purposes is not available in any area that has been identified as having special flood hazards. So there's a flood insurance rate map and it shows zone A, zone AE, zone AO, zone VE, any of those high hazard areas, and you want assistance for building a building or putting equipment inside of a building, machinery, fixtures inside of that building, unless the community is participating in the National Flood Insurance Program. So you have special flood hazard areas identified. In order for federal financial assistance for acquisition or construction purposes to be available, the community has to participate in the National Flood Insurance Program. So you see why I said there's a stick that comes into play if you go all the way through that regulatory process and there's a flood insurance rate map that's in effect in your area of Indian country. So here's an example, flood insurance rate map for Roseau County, Minnesota. And we have this area, the blue shaded area that identifies zone AE, the special flood hazard area. Now on our map, it's identified as being within the jurisdiction of the city of Warroad. Never mind the misspelling name of the city of Warroad there on the map. That was an error by some contractor. And the map was effective on April 19th, 2017. So that area along the shore of the Lake of the Woods is in zone AE and the map took effect April 19th, 2017. Now, if we open up the Roseau County Assessor's website, we'll see that that parcel there in the aerial photo looks kind of vacant, is actually occupied by the Seven Clans Casino of the Red Lake Band of Chippewa, and it's owned in trust by the United States of America for the benefit of the Red Lake Band of Chippewa. So as I was saying, sometimes our maps don't clearly identify Indian country. However, that land is identified by the administrator of FEMA as having special flood hazards. Now, it may very well be that Seven Clans Casino was not built with any federal financial assistance. It may be that it was venture capital and some other sorts of arrangements, but there could be consequences down the road and issues to be dealt with by the Red Lake Band or whoever it is that they might have contracted with to operate and run that casino. These are considerations you might want to take into account whenever you're doing any sort of land development planning, any sort of economic development planning, or whenever you hear that FEMA might be making flood hazard maps or doing flood hazard analysis in your area. It pays to be involved. Now, there's another component to this where federal agency action is involved, whether that's a permit of some kind from a federal agency or some sort of assistance from a federal agency, whether that agency is USDA Rural Development or the Bureau of Indian Affairs. And that's Executive Order 11988. And that executive order, which goes back to the 1970s, requires federal agencies when they're taking an action to determine if that action will take place in a floodplain. Now, if they find that action is going to take place in a floodplain, they follow an 8-step process to consider and determine what possible impacts to the floodplain might be. Whether it's going to impact flooding and the potential for flooding of other folks, whether it's going to affect the development that might be built in that floodplain, might be a danger to that development that they're proposing to build in the floodplain. This is required by the executive order regardless of whether the Flood Disaster Protection Act is involved, whether we've provided a map to show flood hazard areas or not, and regardless of whether there's financial assistance or a loan involved. There is a more recent executive order, which has been a subject of controversy in recent years. I won't talk about that a lot, but it did enhance this executive order 11988 to require consideration of the impacts of climate change. That's in a process of change right now as to how that applies. So can't really predict how that's going to go in the future. So let's consider a few scenarios. Let's suppose your tribe has some lands that are shown on an effective flood insurance rate map. You might have existing or proposed development that's shown in the special flood hazard area. The fact that special flood hazard area is identified might limit the availability of federal financial assistance if your tribe doesn't participate. It might result in a requirement by a federal agency or a lender to purchase flood insurance if the tribe does participate. There's a lot of different combinations of scenarios that could come into play. If some of your tribal lands, whether they're trust lands, allotted lands, fee lands that are within the exterior boundary of the reservation and under your tribe's jurisdiction, are shown in the special flood hazard area, depending on what you might want to do with that land and whether it requires federal action or federal financial assistance or some kind of capital that you're going to get from loans. Now, other sets of scenarios might involve tribal lands not being shown on our flood insurance rate maps, in which case you might want to be on the lookout. Are FEMA regional staff and contractors planning to make maps and identify flood hazards in the area? Are there tribal lands that are shown on existing maps that are already out there, but not identified as being your tribal lands? Are you considering acquiring lands, maybe to go into the fee to trust process, or to keep for other reasons or develop for other reasons that might be shown in the special flood hazard area that might be subject to similar sorts of consequences? Are you planning on seeking some sort of federal actions, whether they're permits or some kind of assistance that would lead a federal agency to start looking for flood hazard information, which you might need in order to go through that 11988 process of that federal agency? So we can consider the potential situations where you might be trying to finance construction in a mapped special flood hazard area. If you're participating in the NFIP, flood insurance is available, so there's not really an obstacle to the financing except that flood insurance would be required. Tribes not participating, certain types of financing might be not available, where federal financial assistance or guarantees are involved. If the tribe doesn't participate, the location is in a special flood hazard area. Other types of federal actions. Each agency would have its own process for following that 11988 8-step process. But if the agency thinks that there's flood hazards there, they might be looking for data. If it's shown on a map, they can use the map. It's available already for them to use, regardless of whether your tribe participates in the NFIP. Now, if there's not maps to identify flood hazards and you plan development, you might want to consider, should the tribe join the NFIP? What if FEMA is proposing to make a map at that point? Would you like to have the map show regulatory data? The tribe could join the NFIP? Would you prefer not to join the NFIP? What are the pros and cons? You might want to consider the possible positives and negatives in terms of those consequences of joining. What are some issues that you might consider and maybe raise with FEMA with regard to your development plans in those areas that might get shown as having a special flood hazard? If you're considering acquiring land, you might want to determine whether that land is shown in the special flood hazard area now, or might in the future be shown in the special flood hazard area. If we're in the middle of that process, it takes several years, as Nick talked about. Would that special flood hazard area designation be an obstacle to your plans for that land? Another unmapped scenario, which we've heard about several times over the years, is if there's no data available. FEMA hasn't made a map, there's no special flood hazard area, there's no flood insurance study, and the agency that's considering the action thinks there might be a flood hazard in the area. There's a lake or a river nearby and the land is low-lying, maybe it's even swampy already, and they're trying to consider what the consequences might be of doing whatever that action is. Where will the tribe or the agency get the data to assess the flood hazard and go through that 8-step process? The lack of data could impede that agency from assisting. Getting that data takes time and costs money. It might be beneficial to have data from us, whether it's regulatory data in the form of a firm and a flood insurance study, or whether it's non-regulatory data such as that base level engineering that Nick talked about. Could be beneficial to you to at least have the base level engineering data for this purpose. So, some things to keep in mind. Community means the area over which some governmental entity has land use authority. Are your reservation boundaries or boundaries of lands over which you have land use authority, which may not be the same as your reservation boundaries? I know there's such a thing as diminished reservations out there. There may be allotments that are outside the boundaries of the reservation, for example. Are your areas where you have land use authority identified on our maps? Should they be, if they're not? What lands are shown on a flood insurance rate map today? Whether they're lands that are currently part of your tribe's sphere of influence or whether they're lands you might acquire. And then what areas should be shown if they're not shown? What if you have already developed areas or areas where you're planning future development that might be or are going to be designated special flood hazard areas on a flood insurance rate map? Is the regulatory process that Nick talked about or the non-regulatory base level engineering that he talked about more suitable for your tribe? It's a decision for tribal leaders to consider. Will your tribe want to join the NFIP either now or sometime in the future? It's something to think about. We can't tell you that you must. There are certain inducements that might encourage you and there are certain cons that might discourage you. So some of those considerations. Would the identification of special flood hazard areas on a firm help you prevent people and property from being exposed to flood damage? There's some things you could do to prevent that. You could control future development in those flood hazard areas. You maybe could move some money in the direction of reducing the hazard to the people who already live in those areas or where there's buildings already built in those areas. Would the availability of the insurance be beneficial for the tribe members or other stakeholders who might have interests? Anybody who's doing business in Indian country through some sort of a consensual relationship with the tribe or with a tribally owned corporation. Would that requirement to purchase flood insurance under some circumstances be positive or negative for those who might be affected, all things considered? Can your members who might live in those areas afford to purchase additional insurance that they didn't plan for when they committed to live in that location? Are they able to get up and just move to another area if they can't afford that? Would this create a problem for them? These are things to keep in mind when we come into town saying, we're going to make flood maps. Do you want BLE or firms? These are things that you might want to take stock of and consider at the highest levels necessary in your tribe to make sure that everyone gets heard and to make a considered, informed decision. What are the options that are available at the time you raise this question? If you're in the middle of the process, the options may be less than if you start thinking about these questions earlier, like either before FEMA arrives or at the outset when we're in that discovery phase where we're saying, well, maybe we'll make firms, but we could talk about BLE too if you want. Why are some reasons that your tribe might join? Well, very many loan products, basically anything involving federal assistance, is not available in a non-participating community. So that's a good reason to join because you can't get access to those sources of capital in the SFHA at any rate. Any other direct federal assistance, grants, financial payments from a federal agency is not available in a non-participating community in those high hazard areas on a firm. So firms provide a strong inducement to communities that have flood hazards to join. There's some limitations on disaster assistance for flood disasters under both FEMA's individual assistance program under the Stafford Act, where repair or replacement of flood damaged buildings is not available in a non-participating community in those flood hazard areas where the buildings were damaged by a flood disaster. And there's a limitation in which the public assistance program for publicly owned facilities for repair and replacement of those facilities is reduced by the amount of coverage that would be available under the NFIP, regardless of whether the community participates. The benefit of participating in that case is that you could buy the flood insurance to insure those publicly owned facilities so that that reduction wouldn't have a financial impact for flood disasters. Some other reasons to join, well, having the insurance available. If you're not participating, the insurance isn't available. So if there's folks who might want or need to buy this insurance, you're having flooding and folks want to have that indemnity, it's not available if you don't join the program. There might be private products on the private market available out there, but they wouldn't have the same terms and conditions and they might cost more. Under certain circumstances, such as if somebody has a loan secured by a building that gets transferred to Fannie Mae or Freddie Mac, the servicer might require you to go find private flood insurance, even if your community doesn't participate in the NFIP. It's an unusual scenario, but it could happen. Another good reason to join is, well, if you use FEMA's floodplain management standards and you use that flood hazard data we've provided, that could reduce future flood damage to people and their property in these high hazard areas. You also have a certain amount of pull to support applications for letters of map revision and letters of map revision based on fill, changes to our maps based on physical modifications of those flood hazard areas. Could fill an area so that it's not subject to flood hazards in the future. And you can support that application as a participating community. Some reasons why your community might not want to join. Well, the cost can vary, and sometimes it can be kind of high. How high it is relative in terms of how much coverage you might want to purchase. Lower value building, all things considered and everything else being equal, costs less to insure than a higher value building. But if the occupants of these areas were not able to plan for the cost when they chose to locate their business in that building or move into that house or build that house, cost might turn out to be unaffordable if they hadn't considered that at the time they moved there. So we recognize that could be a strong reason why you might not want to join, because the mandatory purchase requirements could be kind of onerous for those folks. The federal agency lenders, Fannie and Freddie, the federally regulated lending entities, mortgage companies, banks, et cetera, will require flood insurance for the life of the loan if the loan's secured by a building and it's shown in one of those high hazard areas on a flood insurance rate map in a community that participates. You might want to avoid that situation. There's certain consequences if it's actually a flood insurance rate map that's effective if you don't join, as we talked about. And it's also a condition of other federal financial assistance for acquisition and construction purposes when the location of the building is shown on a firm in a participating community. At least the assistance would be available in that case, but the building would then have to be insured against flood. The maximum coverage for a federally regulated lender at any rate can be a high number. Older folks who maybe have a reverse mortgage where they don't owe the amount of the value of the loan, but eventually they're going to be given that money over the course of the reverse mortgage, might find that the cost of the insurance is very high. The principal balance of the loan, the maximum available under the NFIP, or the full actual cash value of the building, replacement cost for single family homes, is the minimum requirement for coverage for federally regulated lenders. So if you owe $200,000 for your house, they would require you to have $200,000 of coverage. The land use regulations to join the program do need to be adopted and enforced based on the data that we provided when there's a flood insurance rate map or an FIS. So you have to use our data and you have to have certain minimum standards adopted and you have to enforce them. So there's a cost to administer those regulations, and they might tend to limit types of development you could build there. If you're going to get capital from other sources, venture capitalists who want to build a building, hotel, casino, convenience store, whatever they might want to build, they would need to adhere to those regulations just the same as if it was tribally owned housing or single family homes under leasehold mortgages. Whatever form of financing you use, you would be applying those regulations to that development. Hopefully this presentation will be distributed in a form where you can use these links. There's a number of resources if you want to get access to some of the details. I'm not going to go through exactly what all these things are, but they're useful details. Government Accountability Office did a report on tribal participation in the NFIP several years ago, provides a lot of background, covers some of the topics I've covered, but from a kind of a direction of we want more tribes to participate in the program. From my perspective, this is a voluntary program. It's up to your leaders to decide for your tribe whether to participate or not. There are certain inducements that Congress provided on a nationwide basis without specific reference to tribes that apply everywhere. And I recognize that those things could be greater or lesser attractors repellent in terms of what a tribe might see this as. So I would love to talk about this with folks who have questions about the details, how it might affect their piece of Indian country, either after the presentation or offline. Here is our contact information. You can reach out to Nick, you can reach out to me. We could put you into contact with our counterparts in other FEMA regions, or by all means, you could contact the tribal liaisons in your respective FEMA regions, and they could put you in contact with folks like us who could tell you about our program further in your region. Thank you, and I hope you all have a nice afternoon, and I think we have some time maybe left for some questions.